Hello and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we bring to you the lowdown of the day's action on the Lal Street. Now, Indian markets, in fact, was a historic day for Indian markets as we scale another lifetime high, climbing above the psychological level of 22,000 on Nifty and 73,000 on Sensex for the very first time. I think what was more impressive was the fact that both indices even managed to end near their day's low, which indicates the strong bullish momentum that we have seen in the past couple of sessions. In fact, as you can see on your screen, it took Nifty just 25 sessions to climb the most recent 1000 points from 21,000 to 22,000. Now, this was the third fastest 1000 point rally ever seen on the 50 share index. At close, Nifty was up 0.93% to close just shy of the 20,100 mark and just about 18 points below the day's high. Sensex, on the other hand, surged by about 1% or 760 points to close at 73,327 mark. And it was not just the headliners that scaled the record high levels today, but the broader markets also moved into uncharted territories as well. The mid-cap 100 index came within the touching distance of 48,000, in fact about 49 points shy of it, but ultimately settled about 114 points shy of the day's high at 47,837 mark. The small cap index also made a record high of 15,687 and managed to close above 15,600 levels for the very first time. Now, the sharp rally seen in the markets in the last two sessions has understandably led to a spike in volatility. As you can see on your screen, India VIX in today's trade surged by over 5% and closed at about 13.79 levels. Now, this, although is elevated compared on a day-to-day basis, it's still a far cry from the 16 sort of levels that we saw just 2-3 weeks back. Now let's talk about what led to this rally. First, it was a rally in the IT stocks after the Q3 results of the big four IT companies, your Infosys, TCS, Wipro and HCL Tech. Nifty IT surged about 5% on Friday, which by the way was its single best run in over 3 years, and today the index surged by about 2% or so. Now on the whole, Nifty IT has a 14% weightage on Nifty, so a rally in Nifty IT leads to a rally in the index. Another reason was the participation of the banking stocks. Now, Nifty Bank, remember now Nifty Bank has been a laggard for the longest of time, even from the start of the year it has been a laggard, but in the last 2 days we have seen good bit of a participation, and also as we know Nifty Bank contributes about 37% to the entire rally in the Nifty. So it has a constitution of about 37%. So a good movement on Nifty Bank leads to a good movement in the 50 share index as well. And then the third factor is of course the strong movement that we are seeing in Reliance Industries. Now the stock has a weightage of about 9% on Nifty, and since the start of the year the stock has rallied somewhere close to about 7.5%. Now this compared to a 1.6 surge in Nifty. Other heavyweight stocks like your ICICI Bank, HDFC Bank, to name a few, are also driving the markets higher in the past 2 days. But let's also bring on board Mr. Amit Kumar Gupta, founder at Fintech Capital. Sir, thank you for joining us here on Last Tick. Appreciate your time. Now, we have finally managed to claim that all elusive 22,000 mark in this strong 2-day surge that we have seen. How much further can we go in this drive?
Yeah, hi Zayesh, thank you for having me. I think sometime in mid-December, I appeared on the show and I said that 22, 300, 400 is our immediate working target. We were about 21, 200, 300 there, so about a 1,000 point rally we were expecting. I think that's our immediate target, and once that is achieved on a sort of a weekly basis, then we'll have a relook at the market dynamics. But as of now, I think that seems to be our immediate target. I think what is happening is that a couple of big headwinds that were there at the last year till October, they are sort of now actually acting as a tailwind to the market. So whether we are looking at the flows last year, which were impacted by the rise in the global interest rates, I think that has turned on its heads. Similarly, commodity prices like oil prices, which were elevated because of increasing geopolitical risk, the Hamas war, etc. They were concerns for the market, and they have also sort of now declined. Oil has also declined below 80, and that has also turned into a tailwind. So a lot of these factors are contributing in the rally in the market, and
Hmm.
the Indian earnings trajectory is also expect to be fairly robust, close to 20% by the corporate India, and I think that in the near future that will continue to be the primary driver of the markets.
But Amit, talking about the geopolitical factors like the Ukraine war, like the tension going on in Israel, as well as your Red Sea crisis, they are not. It's not like they are showing any signs of slowdown. In fact, they have gotten worse since we last spoke. I think the date you mentioned, I think November or December. But oil
Hmm.
prices have largely stabilized. Do you think the market is, at least for now, they are, in a wait and watch sort of a mood and not really paying much attention to the global geopolitical factors and paying more attention to the local factors?
No, I think geopolitical factors, especially in the Red Sea, what is happening is a little bit of a concern because I read one of the newsletters quoting one of the charts this morning, and I mentioned that the global container shipping rates have become twice since November 30th, and that is a concern. So not just the shipping rates, even the insurance cost has gone up. But at the same time, a lot of these companies have sort of now found other routes also to navigate. That is taking a little bit of more time. So there could be some delay issues in the components. But it is still not, up to a mark where it would start impacting the margins or the profitabilities of the company. But if this continues for, let's say, another 3 months or so, I think that then markets may develop a little bit of a worry. But market may not pay too much of attention at this point of time. But given how the data is moving, that could be a concern in the near term.
All right. And, the last time we spoke, I think at the start of the new year, 10, 12 days ago, we were talking about IT stocks and you were cautious on the IT pack, especially, on the bellwether firms like TCS, Wipro, Infosys. And, they have since come out with their numbers. And although the numbers have been muted, they have beaten street expectations. So, in the light of recent developments, has your view changed on the large cap IT stocks?
No, my view actually remains the same. A lot of the price movement which we have seen in the exchanges on the screen are mostly short covering rally which is happening. What seems to have happened is that companies have reported in line or a minor beat to the modest expectations which were there. Because these stocks haven't done really well, the expectations were quite muted. But because there has been a slight beat in certain stocks, we are seeing a positive reaction to these stock prices. But I would say that from a standalone earnings point of view, the earnings trend in the IT services sector continues to be mixed. You take the example of Wipro, which declared results over the weekend, or I think on Friday. It was up about 7 to 10%. But they have shown 4 quarters of degrowth. In fact, the FY24 earnings also, would be about 3 to 5% only. So I expect that kind of trend to happen, and 3 to 5% kind of a growth does not excite us as an investors or as someone who recommends equity research strategies to its clients. We are looking at more 15 to 20% kind of robust growth, which I think is very difficult to come by in the IT services sector. So one needs to look at it, more at the mid cap and the small cap space, which can grow much faster than these services company.
So, Amit, what do you think the market is celebrating? Because as you would have seen on your screen, some of these stocks have risen by about 10% or so just in a couple of sessions. So, do you think that the market, the celebration and the kind of rally that we have seen in the past 2 days has been premature?
So, I mean, what is also happening is that we are coming from a very low base in the IT services sector. So, the earnings were really 1 to 3% kind of a earning growth, which was expected. We'll end up probably at 4 5% for the whole financial year. So, what
Hmm.
a lot of analysts have done is that the expectations for FY25 has been risen, or they have upgraded a little bit to 5 to 7%. Even though whether we are going to achieve that or not, given that there could be a scenario of US slowing down, that will come to see. But I think there has been a modest upgrade in the earnings for FY25, and that's why we are seeing a little bit of the action in these companies.
Hmm.
Also, market is looking to invest more in the mega caps and the large caps, which can provide some sort of comfort in case there is a liquidity sucking events due to global conditions or due to geopolitics. In that case, the beta for these stocks is as compared to what the Nifty benchmark is. For example, if Nifty declines by 5%, these stocks would also decline in some sort of that kind of a uh, range. So I think it's a more of a defensive kind of move also from a lot of market participants, plus
Hmm.
a little bit of upgrade has helped.
All right, and shifting focus from one sector to another, the banking pack. Now, the numbers are going to start trickling in from tomorrow. HDFC Bank will be the first major bank to come out with its numbers. But broadly speaking, what are the key variables to watch out for in the Q3 earnings of banks?
So, I think the consensus view is that banks are where the growth is, banks are where the visibility is, banks are where the valuations are attractive.
Hmm.
Uh, but the banking deposit growth has picked up, on year basis. The deposit growth today is about 13% compared to what it was, 18 months ago, where it was about 10 to 11%. So I think the credit creation is happening. The economy is robust. The deposit growth has picked up, and that will continue to be the case. However, I feel that the pace of the bank earnings has gone up.
Hmm.
Last year, we were probably at some sort of a cyclical high in terms of ROAs for the banks, not just because the margins were elevated, but also because the credit costs have been unusually subdued because we were coming from a post-COVID period. And given that, definitely there will be some moderation in the ROA for the banking sector in the coming year. Again, there could be some sort of pressures on the NIMs. NIMs might also start declining now. Um, so I think, given the fact that ROAs would also peak out, NIMs would also peak out, the growth will be in moderation, but still the valuations are quite comfortable to be positive on the sector from a 2 to 3 year perspective. In short, I think because it's a high beta sector, so it would also depend a lot how the FI flows come into the markets over the next 6 months or so. But overall, as compared to, let's say, other parts of the markets which are very quite expensive, and overall, financials, I believe, is still the place to be have some sort of allocation in the portfolio.
All right, and before we let you go, I also wanted to touch on Geo Financial Services. Now, the numbers are expected to come out anytime soon, but the stock has given phenomenal returns on a year to date basis. I think it's up somewhere around 14%. In fact, today also the stock surged by about 5%. What is the street really celebrating as far as Geo Financial Services goes, and what are some of the key variables that you'll be looking out in the Q3 print for Geo Financial Services?
See, ever since the Geo Financial has been listed, I've, a lot of times I've come on the show and talked about this, that the Geo Financial is a futuristic business. The numbers won't tell you the real picture of what's happening in the system. Geo Financial Services is a holding company. They operate through a lot of these consumer-facing subsidiaries, whether it is Geo Finance or Geo Insurance or payment solutions, and also now they have the AMC. But a lot of these businesses are basically at a very nascent stage. For example, the AMC, which is a joint venture with BlackRock, they have just applied the license in October. and they're awaiting license. So there is no business as such there. It's only approvals is coming, and the business is going to scale up. So I think what I am looking for is that from FY25 start, what kind of projections they are giving, what kind of AUMs they are looking to gather at the start of the new financial year, and then we have to see, with the expertise which they have developed over the past 6-7 years with the Geo Financial network, with the Geo network. Then we have to see how they are basically catering to personalizing all the financial products and services, and catering to the needs for in the NBFC space. I think it's a lot of these numbers won't make sense immediately, but the expectation is that there could be a very high growth coming in from next financial year.
All right, so still a wait and watch mode as far as Geo Financial Services is concerned. Wait for some clarity as to what the business model is going to be. That's the view coming in from Amit Gupta. Sir, always a pleasure speaking to you. Thank you for joining us. Appreciate your time, appreciate your thoughts. Thank you.
Thank you, Suyash.
But that's all we have in this edition of Last Take. But stay tuned with us as we'll be back with Business Plus on the other side.
Ram's Ayodhya rebuilt. Ram Lala's Pran Pratishtha. Countdown to January 22nd. Dateline Ayodhya. Catch the mega coverage only on News 9 Live.